Receiving again in our program Gary Schniteky, professor at the University of Illinois, and he's going to talk at this accurate time about the decisions regarding crop insurance. So Gary, how are you today? What do you think are the most important things to have in mind when making those decisions about crop insurance?
Yeah, so if you're in the Midwest, you have until March 15th to change your policy that you used from last year. I guess the biggest thing, there's two things to keep in mind. This year, we're likely to have higher projected prices. The markets are much higher than last year, so that we're going to have higher prices, and that'll set our guarantees higher. The other thing that we have to keep in mind this year is that we have a new product, an ECO, enhanced coverage option, and that is something that we might want to look at and take advantage of.
Yes, and what about the types of insurance?
Yeah, so most farmers in this state take revenue protection, which is a farm level sort of product that makes payments at the farm, and it has a guarantee increase in it. That's over 90% of the acres in Illinois are insured with that. There's RP without the harvest price exclusion. Again, doesn't increase if harvest price is above the projected price. And yield protection, which is a yield insurance. You have those same three options, RP with harvest price exclusion, and yield protection as an area plan as well. And again, most people gravitate towards RP.
Yes, and what about the prices this year?
Yeah, so this year, if we're setting those prices now, we would be close to 440. And again, those prices are based on February settlement prices, the DEES contract for corn, and the November contract for soybeans. And those would be sort of in the 440 range now for corn, sort of in the 11-ish range for soybeans. So again, those will be higher than they were last year.
Yes, and what about the percentage of coverage? Do you think most farmers will get about 90%?
So under RP, your highest coverage level is 85%. So most people are in the 80 to 85% in the northern and central part of the state, and sort of in the 75% range in the southern part of the state. And that's a good place to be. That's somewhat driven by the price or the cost of the product. Enhanced coverage option, ECO, will let you take that up to 90 and 95%, but you have to do it at the county level. The coverage above the RP is based on county revenue. So, yeah, so that's an alternative that people may wish to consider.
Are you expecting more premiums for this year?
So, yeah, I would expect basically farmers to take the same coverage as last year, plus maybe some going into ECO. So how much of that is a question. If we're looking at a 85% RP policy, it will be more expensive this year, most likely. We don't know for sure yet. Most likely because the projected price is higher. So that's going to cause those premiums to go up.
Okay, but it's still at affordable prices.
Yeah, it's still at affordable prices. In the central part of the state, northern, so 85% RP policy at enterprise levels will be $15 to $18 an acre.
Okay, is there something else would you like to add?
Just take a look at ECO, and this might be the year to consider it because of the higher projected prices, but just look it over and see what you think. It does come up with a healthy price tag.
Gary Schnitky. Thanks a lot.
You're welcome.